Welcome back, everybody. Today we are discussing a massive move from Bitcoin on the horizon. This is, of course, in a climate of regulatory FUD from literally all angles, as in reality, Bitcoin is setting up for an historic run. What we know for a fact is that the on-chain metrics tell the tale that oftentimes the charts and the news do not. So if you guys are excited to get the truth, the real story, and help peel back the layers to understand what's really going on here in Bitcoin land, in crypto land, the stuff that the headlines can't tell you, the stuff that is really, really important to know if you want to understand where money is moving, where the big players are positioning themselves, because this is now a global war for mindshare, a global battle. And most of the big whales, most of the big players in this industry, they do not want you to win. They do not want you to be early to these networks. And that means that we're going to have a constant state of FUD, of panic drops, of leverage washouts. And of course, during those times, the smart money moves into positions of strength. And that's why it's super important to discuss the topic that we have today, which is, of course, one that Mr. Will Clemente is going to help us shine some light on. Before we jump in, I just wanted to review a little bit. I wanted to review one particular set of facts here, because this is really, really important here. It's really important that you guys see this. What we see is the market recovering very nicely here. We see the market's holding here over critical levels. But what's really important here, and I wanted to shine a light on this, is that the FUD right now is regulatory. The FUD right now is just regulatory. And this happens all the time. We've seen this with the China FUD of 2017. We've seen this with the minor crackdown earlier this year in May. We've seen this with the Ripple XRP lawsuit. We've seen this time and time again. And when the market FUD is regulatory, that is one of the easiest things to buy, because in reality, we know that over time, the regulation will sort itself out. Over time, the biggest nations, the most competitive nations in the world want to be hospitable homes for Bitcoin, cryptocurrency, and this entire decentralized movement, as it is the biggest money and the most disruptive movement on the planet. Now, we know that when there's regulatory FUD, it opens up huge opportunities. As people get scared, they worry that the regulators are going to come clamp down, that there's going to be an apocalyptic scenario. Well, after years and years and years, guess what? There's no apocalypse. There's no doomsday. There's only panic sellers and strong holders. And on that note, let's go ahead and bring in the man himself, helping you bring a little bit of panic to the chaos. Mr. Will Clemente, thank you so much for joining us. It's an absolute pleasure to have you on.
Hey, brother. Happy to be back on again. How you doing?
Really good. Thank you for joining us. And one of the things I love about your content that I think is really important is a lot of folks in this industry don't know what's going on. They don't know what is happening when things like the recent flash crash that we had just occur out of nowhere, and they figure there must be some real reason that something is flawed with Bitcoin, that something is flawed with Ethereum. What do you have to say to those people who might be in a state of panic right now?
Yeah, sure. So like this recent move was pretty much all driven by derivatives. It wasn't any, long-term investors that were doing the selling. It was just pretty much a cascade of liquidations. And so for listeners, the way you can kind of think of this is, let's say a trader has their stop loss set at, I'm just coming up with a completely arbitrary number. Let's say it's 50,000, right? And so if the price goes down to 50,000, that stop loss gets triggered, and they become a forced seller in the market. And so once they are forced to sell, then the price moves down to 49,950, right? And then that triggers the next person's stop loss. Then they become a forced seller. And so you have this cascading effect where when you get a lot of leverage in the system, you're very apt to these kind of wipeouts. And this is exactly what we had the other day. And so like when you looked at open interest, which is the total amount of value locked in futures contracts, that was way up. And so that was basically saying is like all the leveraged apes were going crazy, right? They all thought we were about a moonshot. So everyone was leverage longing. And also you had funding, which is kind of the way you can measure the sentiment of traders. It's looking at, funding is essentially the mechanism that pegs the perpetual swap, which is these contracts that traders are using to get leverage to, and how it pegs that to the spot price or the index price, which is like a weighted average of all the spot exchanges. And so funding was high, which was showing that traders were in general looking to go long. And so, yeah, like I think we were somewhat prone to this. I was a little caught off guard by how massive the move was. But nonetheless, that's what it was. When you look at on-chain data, it tells a completely different story. While all the leverage traders got wiped out, what you actually had was whales coming in and scooping up cheap coins. And so I have a couple different indicators that track accumulation, and you actually saw ticks up in all of those. So you saw coins moving to strong hands, which are basically the experienced market participants, and also whales. There's a large uptick in their holdings on the same day, and also exchange balances went down. So this is just another correction on the way up. We get these wipeouts while Bitcoin has these bull phases, right? Like from March of 2020 to March of 2021, we had like 20% plus drawdowns. A lot of those were just leverage wipeouts. Like I'm sure people remember Thanksgiving last year, we were heading up to new highs, and then all of a sudden we had like a 20% or 25% down day, right? And that was just a wipeout on the way up. I think it's easy to get caught up in these short-term moves and get panicked, but when you actually look at the underlying market structure and like the behavior of investors, which isn't always perfectly reflected by price when you get these liquidation events, right? That hasn't changed whatsoever, only strengthened on that day. So yeah, I don't see anything that's concerning to me whatsoever in kind of the broader landscape. I think we still go much higher over the coming months.
Yeah, no, and I appreciate that. What people fail to understand is that crypto is so generous because it has these whipsaws. It doesn't just go in one direction. It goes violently in both directions, and you need to embrace that. And it's going to be like that probably for the next 5 to 10, maybe even longer, many years. It's going to allow for this level of volatility. And people come in most of the time during the good times, right? You see most of the people flock in when you've seen many, many green candles in a row, which is, of course, the worst time, because when you've seen so many green candles in a row, you're almost guaranteed to have some meaningful pullback. And most importantly, what you've hit the nail on, which is this market is addicted, completely addicted to leverage. It's addicted to debt. It's addicted to leverage. And that is, of course, it's kind of like the degenerate trader, right? Someone with a dollar can actually trade $100. Someone with $1,000 can trade $100,000 position. And it's very, very seductive to do that, especially if you think, well, the market is only going up, so how can I lose? And then you get these cascading liquidations, which always throw people off. Guys, Will's about to pill you on what's really going on. Smash the like button for him. He's actually started his own YouTube channel. We're super, super excited to see him come over to the bright side that is YouTube. He's absolutely a phenom on Twitter. So I'm super excited to see you hop on and dominate the YouTube sphere here. But let's dive in and talk a little bit about, I'm going to show something you posted today so that people can get a sense here of what's going on chain. Why did you post this today? You're muted, by the way.
My bad. This is basically looking at whale holdings. So like for a whale, I consider that any entity which are forensically clustered addresses, any entity with 1,000 Bitcoins or more. And then what this is doing is filtering out all the known entities that we have identified on the blockchain. So filtering out Grayscale, the Purpose ETF, QBTC, and then, of course, most importantly, the exchanges. And the reason why this is important is because, this is just an example. Let's say you haven't filtered out for the exchanges, and you see a large movement of like a large uptick in whale holdings, right? But you haven't filtered out for the exchanges. Ideally, you think that's a bullish thing, right? Because coins are moving to whales. But what's actually could be happening if you haven't filtered out for these exchanges, it could be coins moving onto exchanges, which is a bearish thing. And so what this metric up on the screen does is filtering out the exchanges and all those entities. And so what you get is just the raw balances of whales with over 1,000 BTC. And like as we just touched on that drawdown that we just had, you actually saw, as you can see in the top right, the holdings of whales actually moved up. So yeah, it's like you think about this, like, when you become a forced seller, who's on the other end buying those coins? It's whales. They're sitting down there ready to scoop up your cheap Bitcoin. And it's easy to kind of get caught up in these leverage moves and get freaked out. But when you actually look at what is the smart money doing, well, they're gobbling up these dips, right? They just keep adding to their stack. I mean, you can see those since kind of mid-July. They've just been in straight accumulation mode. And these whales also who did a lot of the dumping heading into May. So yeah, this is looking really positive, this chart overall.
Yeah, I mean, it's pretty, like, once you look at the charts and you say, okay, who got liquidated? And obviously we know it's a not so secret fact that all of the noobs are on Bybit, right? And so when you see big, greedy, over leveraged positions coming into Bybit, and then you see cascading liquidations on Bybit, well, that's almost a slam dunk that you just saw money move from sort of greedy, reckless noob traders to the hands of strong long-term holders. I mean, it's not 100%, nothing's 100%, but in these moments over the last 4+ years that I've been really studying this, it seems as though every time, unless we're talking about like 2018, where on-chain was super bearish, and the big holders, like you've shown in your statistics and your chart analyses, like those are when you see the exit. When you see those long-term holders selling, that's when you should be freaked out, right? Because other than that, it's pretty much it's only accumulation. It's only been accumulation since March 2020, right? All the big holders just wait for these dips and they just load up, and then they just load up, and then they wait for a little bit of a greed to enter into the market, and they kind of lay off and wait for the next correction. Is that pretty much as simple as it gets?
Yeah, like another way to think of this is I have a metric. It's called spent output age bands, and so it looks at all the spent outputs on each given day and separates it by cohort based off of the age that they've last moved. So you're looking at coins that were last moved in 24 to 24 hours to a week to a month, a year to 2 years, et cetera, et cetera. And so when you look at all the spent outputs over 6 months, that actually ticked down the other day when we had the cascading liquidation. So long-term holders actually sold less. And so, yeah, like that's another thing. Like you just have to follow the smart money. Like when you look at the dead cat bounce after 2017, when we came back up to about 17K, what you saw is that like long-term holders really took exit liquidity on that move. So basically they said, we're not super confident that, we're going to rocket back up. I kind of missed selling that top around 20K. And here we are, we got another move up. I'm going to go ahead and just like lock in my profits and I'm going to jump ship, right? And spin outputs jumped up to like 45% of all overall outputs. So like you saw really heavy selling from these long-term investors. And so at the time, obviously I wasn't around back then, but would have been highly bearish at that time. And what we've seen lately is we had a one-off spike about 2 or 3 weeks ago. From one day, we had some selling from like 2 to 3 year, the 2 to 3 year cohort. But aside from that, long-term holders have just been sitting tight, right? And their holdings have only increased. About 2 weeks ago, we actually got a new all-time high in the holdings of long-term holders. So yeah, like they're buying like crazy. They've been buying since we drew down in May. What you see is like this overall dynamic where heading into the bull market, long-term holders generally sell into strength. They don't perfectly time the tops, of course, but they just sell, into strength. And then in the bear market, they accumulate increasingly. And so some people have said, oh yeah, well, long-term holders are buying. Isn't this an indication of, we're heading into a bear market? And the answer is like, I understand your thought process, but you have to look at the rate of change and also the base that long-term holdings, without a better way to word that, is higher than where it was in 2017. And so I posted this chart the other day. Do you want me to screen share?
Yeah. Go ahead and share.
All right, cool.
We'd love that. Guys, if you guys want Will to screen share, smash that like. Let's welcome him. This is the next generation of analytics, of big brains coming on the blockchain. This is exactly what we need to encourage. Please subscribe to all his links in the description and smash that like button. Show some love here. Will is actually, I learn from him every day. I appreciate your content, brother. And I think everyone should really be following you, as this stuff helps you bring some calm to your nerves, right? When we're in the midst of these crazy violent movements in the market, it really helps to see what big money is doing, because the big money, they know what's going on. They probably know the news days, if not weeks before it happens, and they're prepared and they're reactive with a long-term strategy. Most people, if you have a 5-10 year strategy, you're going to do well in crypto. So understanding what these people who have long-term strategies do, that's how you get ahead and stay ahead.
Yeah, for sure. So what you'll see here is like, this is basically the percentage of long-term holder supply relative to overall supply. And so what you'll see is, let me click this one off. This is using adjusted supply. So this is filtering out the coins that are deemed to be lost. Actually, let me pull this up. I think this will show it better. Sorry. But what you'll see whenever I pull this up is that the amount of time that it's taken for long-term holders to reaccumulate the amount of coins that they possessed before we headed into the main part of the bull market is way faster than any other period of time in Bitcoin's history. The only other time I think that we've seen this fast of a reaccumulation was probably in like mid 2013. Because as a general premise, it's long-term holders that really set the floor on these big moves, and it's just the general concept that they lock up a certain amount of supply, and then there becomes a supply shortage on the market, and then the free float of available supply goes down, right? So let me see if this will pull up. I also tweeted it out the other day, a couple days ago. We might have to. It seems like this is unloading here. Let me see. I don't know why my computer's being so slow.
It's all right. There's too much alpha. It's clogged with alpha. But yeah, no, what you're saying is really important, which is as a general like temperature reading for the market as to whether, as we all know, when Bitcoin collapses, everything super collapses in the market, and there's a lot of essential, interwoven performance. So understanding that Bitcoin's performance is almost exclusively driven by these big long-term holding whales. When they're buying, Bitcoin is well supported, and when they're selling, Bitcoin is very, very poorly supported, and it's probably about time to get out and stay out for a couple of months, if not a year plus. That said, what tools, obviously, while it loads up here, what tools do you think, if people are really curious, that they should be looking at the most, as to understand what these whales are doing?
No, for sure. One of the main things that I've used, and Willie has been using lately as well, is Glassnode's liquid supply metrics, and just in general their entity metrics. So for anybody who's familiar with Glassnode, you'll know they have like the higher level tier. It's like the professional grade subscription. Like what you're basically paying for there is this entity clustering that they do, and a lot of this is like data science, like forensically going in and like sorting together and categorizing all the different addresses and their behavior and how they move. And so you can get something called liquid and highly liquid supply. And I think there's a lot of alpha here, because what you're basically identifying is the strong and weak hands in the market, right? And so like what I'm looking at with these metrics is like, is supply moving to these liquid entities, or supply becoming highly liquid? So like, for example, in May, you saw a lot of supply became liquid. And that was a highly bearish thing at the time. You also saw coins move on to exchanges, which was a big red flag, right? But I think like there's a lot of alpha there. Or like when you started to see coins get locked up, aka coins becoming illiquid, back in kind of mid-July to late July, I became really strongly bullish there. A lot of people, I remember, not everybody, but I remember there were a fair amount of like the TA guys that were calling for, like 25K or whatever. Oh, here we go. It actually loaded on Glassnode. Can you see?
Yeah, I see it.
Okay, cool.
So but what's this red line? Where do we go?
Yeah, the red line. I don't.
Go ahead. You drive.
Yeah. So this is what I was trying to look at earlier. This is a ratio of the amount of coins held by long-term holders, and then comparing that at just a very simple ratio to short-term holders. And so as a general premise, as we mentioned, once coins get locked up by those long-term holders, you have a supply shock effect on the market. So you'll see here, right? Here we started moving out of the bottom of the 2018 bear into this 2019 mini bull run driven by the plus token Ponzi scheme, which was basically like artificially locking coins up. And then also you started to move up here. Then we had COVID, of course, which put a little damper on that. And then we have this reaccumulation phase right here, going into like, May, June of last year. And then we got another basically, supply shock on the market. And then, as you can see, long-term holders then begin, as we mentioned, selling into strength into the main phase of the bull market. But since then, since May, they've completely reaccumulated those coins. So this is what I was talking about, the base that they've come off of. When you look here, right, the base is way lower than when the base that they had to grow off of here. So they didn't have to accumulate as heavily to get to that same point of supply shock. And as you can see, they've come all the way back up to where we're just entering the zone now that's previously kind of initiated a supply shock effect on the market, which, that's from like a macro standpoint, one of the main bull cases, at least from an on-chain perspective. And so then this leads us to this blue line. This is what we had just mentioned. I know it's kind of hard to like think about without seeing a visual, so this should help. This is the reciprocal ratio I came up with. This is like actually probably like the flagship metric that I use for analysis, because it's like I mentioned, capturing the movement of coins from weak to strong hands or from strong to weak hands, right? Like when you look at the 2017 peak, you saw this huge drawdown because all these coins were moving from strong hands to weak hands. Or when we were moving into the early phase of the 2017, well, I was probably say like the mid phase of the 2017 bull market, you had a bunch of coins got locked up. You had the supply shock effect on the market. And so here, what you'll see is like after March, you had like an enormous amount of coins just began to get locked up. And then heading into May, that turned around. So of course, like once you started to see this here, this downtrend here would have been bearish, right? And I didn't have this metric back then at the time, but I would like to think I would have been bearish here, because you started to see coins move from those strong hands to weak hands. And then down here, this is what I was talking about. We had this huge bullish divergence. And like, I remember down here, this is when all the TA guys were calling for like sub 20K. But what we had is like this massive bullish divergence. So you see we were making higher lows on the oscillator, and then boom, we had this big, massive spike right here. And at this time, this is where I was like, okay, prices bleeding sideways bearish. You have long-term investors coming in and locking up coins at this massive rate. Eventually, we're going to get some kind of supply shock effect on the market. And then we did. We got this massive move here, had another impulse, and that kind of drove us higher here. And now you'll see on the right side, we're actually starting to get another impulse. And so that's, to me, showing that we're probably going to get another price move up here in the coming weeks, because once again, you have this little divergence where the price is going down, but long-term holders are actually locking up coins. And on a very similar note, this purple line, this is the exchange supply shock ratio. And so what this is just another way to look at like the amount of coins that are available to be bought to the amount of coins that you can't buy. So like we looked at long-term holders quantified based off of the amount of time that they've held coins, which was the green line. The blue line is looking at their spending behavior, and this purple line is literally just a ratio of the amount of coins that are available to be bought on exchanges that you can buy today to the amount of coins that you can't. And so we've seen a massive recovery in this. We're actually now in not price discovery, but I guess you could say like metric discovery for this oscillator. And once again, like you saw this kind of divergence here where coins were getting locked up, while at the same time price was grinding kind of sideways bearish. And then we had this pop up here that kind of drove us higher. But yeah, once again, price has kind of just gone sideways while you've seen more and more coins moving off exchanges. We're actually at like a 3-year low in terms of the coins that have been moved off exchanges.
I really love the long-term holder supply shock ratio that you had up the green line. And I think that one really tells the tale, because if you look here at the last few, especially if you zoom out on the chart a little bit, get a little more history, what you can see is that it does have kind of predictable tops. You can see that it tops around that 5.7. I'm not sure which scale I should be looking at, but you can see the area of the chart there where it tends to top. We saw it top there in 18. We saw it top there in 19. We saw it top there in 20. And that seems like where we're headed right now, right? It seems like we're headed towards, and you can see as it overlays that gray price chart, you can see that as it starts to get up into these upper territories, this is where the magic happens for sort of parabolic price action. So it's quite interesting, I think, to look at this metric and understand we haven't even gotten to that supply shock moment yet, really. Like this whole run hasn't really seen that crazy supply shock like we normally see. Yes, we did get a little bit in 2020, but it looks like where we're headed, at least based on chain, is a massive, massive run. You could argue that we really haven't seen the main sort of segment of the bull run based on this metric, right?
Yeah, for sure. Like, I think we'll get into that top part, like, where historically it's initiated a supply shock, like probably in the next month or two. And that's when you'll really start towards the end of the year, start to see some crazy price action. This is, well, I have it actually like a visual of it. So let me go on my Twitter because it'll be kind of hard to see without like the labeling. This is my pinned tweet. This is another metric that I created. I call it the liquid supply shock RSI, or the liquid supply RSI. What you're looking at here is you're running a stock RSI over the liquid supply change, which is the 30-day change. So like looking at what was a liquid supply 30 days ago, what's a liquid supply today? And so plotting this out on this stock RSI, you get this interesting oscillator where you can see where, whenever you go from a full reset, so a full kind of capitulation move of coins to weak hands, to a lockup, or what would, traditionally people would use this as an overbought territory, but what this is showing in terms of liquid supply is that a lot of coins are being locked up. And so when you go from a full reset to a move above the range, you get a supply shock effect in the market. So you'll see here, heading into 2017, you had this wave of supply shock. And that's what I like to think of this as, a wave, right? And then you had a very elongated wave heading here, which you really didn't get a crazy effect, right? So you got it in like the bottom of the bear that headed into the mini 2019 bull market, but it really wasn't strong because you can see how long it took. It was kind of this elongated wave. There wasn't a whole lot of momentum to it, but once you did break above the top of the range, you did get a supply shock effect in the market. It just wasn't, insane, effects because there wasn't a whole lot of momentum. Going into last year, you'll see we had a stronger supply shock than going into 2017 when you just look at the slope, right? It was pretty much just straight up. You had this little kind of wiggle room here. But when you go over to now it's pretty unprecedented for several reasons. So first of all, like the oscillator came way below the range. So like when you compare it to here, and here, it started at a much lower base. And then you came straight up, right? Like when you're looking here, you got some wiggle in here, right? You got some, sorry, my voice is cracking and stuff. I have a bit of a cold. So just for everybody, I sound really nasally and stuff.
Guys, Will came out here to give you this free alpha. He's sick. The least you could do is just completely obliterate that like for him. All right, come on. That's all he wants. Go on, Will. Sorry.
Yeah. So like here, what you see is like, it was just straight up. There's no wiggles, right? It's just the wave was just vertical. And so to me, I was like, when I first saw this, when I first created this metric for the first time, I was like, holy cow, we are going to absolutely rip. And this is down when we are at 30K, right? Like you can see where we got above the oscillator, above the range right here. And so far we've started to see the effects of the supply shock, but looking back, especially at the 2017 and the one last year, this to me is showing that we're going to go much higher in the coming months. And then you pair this with the other metrics we looked at. To me, I would be surprised if we went through another one of these kind of 4-year cycles. And I know this is like a kind of taboo opinion to have in kind of the in the crypto space, but when we go back to watch now, it's not going to load. But when we go back to the supply shock metrics, and when we look at that blue line, if you remember, that's the ratio of the the entities that take in a lot of coins and don't spend a lot to the entities that are moving coins in and out all day. We plot this out over time. Let me just zoom in a little bit here. A lot of the data is funky before like 2011.
Yeah, it just was. It was too parabolic, the growth.
Yeah, I guess I cut this part off. Here we go. Okay, if you were to draw, and I've done this on my Twitter, if you were to draw basically a descending triangle, what you'll see is that if you drew a trend line I don't know if you can see my cursor, but if you went all the way down here, right, and then the bottom trend line goes all the way down here. You stayed in this descending channel for this metric, but then when you got past, which is interesting because everyone likes to talk about Bitcoin as an inflation hedge. When you got past March of 2020, the kind of macro behavior of this metric completely changed. Like it's pretty much been up only, aside from we had this drawdown, but now we've seen this really strong recovery over the last couple months. If you were to draw this descending channel, what you'll see is that we've completely broken out of that. And now we're kind of in this just like free floating territory. And so like, to me, what that shows is kind of the macro hodling behavior of Bitcoin has shifted. And so now you're starting to see, people just viewing Bitcoin perhaps as an inflation hedge. And like looking at this in combination with the long-term holder supply shock ratio, which we touched on earlier, This is showing that the cycle is not ending, at least in the next couple months. We still have a long ways to go, and perhaps the traditional behavior that we've tracked for these cycles has changed, because here we had a full drawdown into a bear market, and then they slowly reaccumulated those coins. It took a long time, but now we've already reached back into this supply shock range, and we already just had a major drawdown. So to me, like, in terms of like veering from the 4-year cycle, I think these data points make a pretty convincing case that perhaps, dare I say, like this cycle may be somewhat different. My base case is kind of that we move into more of this like free floating, like not saying we won't have drawdowns, right? Like, of course we'll have like 50% plus drawdowns along the way, but I think we move away from these multi-year bear markets, where we kind of have these more rounded bottoms and tops, and Bitcoin just becomes like a more, lower volatility, more dampened moves, in a broader sense. Of course, we're gonna have like these liquidation wicks on the shorter term, but in a broader sense, we won't have as these crazy blow off tops. We had a rounded top earlier this year, and we kind of had a more rounded bottom, a more flat bottom. I would be surprised if we didn't start to just kind of free float away from these 4-year cycles, because like the premise of it is that the miner supply that's coming on the market cuts in half every 4 years, but like miners are at this point, their selling pressure is like insignificant, right? Like in 2013 when the supply issuance cut in half, like that's a huge deal, because I don't know what the numbers are off the top of my head, to be honest, but in terms of like the amount of supply that was on the market at the time, and the supply issuance cutting in half, it was a large portion, right? But now it's pretty much just insignificant. Like the market can absorb the 900 Bitcoin a day that miners are supposedly they aren't actually selling 900 a day, by the way, because miners now have access to capital where they can just cover their OPEX without having to actually sell coins. But even if they were selling the full 900 coins they're getting issued a day, that's insignificant compared to the market, especially a full-blown bull market. Now you see like exchange fees, right? Like the exchanges, well, you've seen Coinbase now say they're going to take 10% of their revenue and hold it in crypto, but the exchanges are just taking their fees and just selling it onto the open market, right? They get back into US dollar basis. And then also you have like ETFs, like, look at Grayscale. They take 2% of their fee, of their holdings every year as a fee. And they just sell that onto the open market, which comes out to like, I think like 12 or 15,000 coins a year that they're selling onto the open market. And like, that's much more significant than the miner sell pressure. And so like, especially if we start to get like a Bitcoin ETF on the horizon, the sell pressure from the fees from that are going to way overpower the miners. So yeah, like the supply side dynamics have completely shifted from Bitcoin's, historical.
Yeah, so I published a theory that I call the microcycle, because if you sort of take everything before 2019, if you take everything before sort of December 2018, and you kind of cut it off the chart, what you see is, and I'll bring up a chart just to illustrate my point here. But what you see is that the cycles look completely different starting from 2019, from the end of 2018. And here, I'll go ahead and reshare my window here. So what you see here is that if we are to look here, especially at 2019, because it gets kind of parabolic, so you can't really see it. But what you see is in 2019, this wasn't actually a 4-year bear market. We had a bull market. You see here in the first half of 2019, if I were to cut off everything else, this looks like a parabolic bull market, right? This is what 2019 looked like. But people don't really remember it as a bull market. People think of it as part of the bear market, right? And then if we extend it out, we see that we got another cycle here. We got a drawdown here from about, the peak was in June. And then the bottom here was really in December, right? But if it wasn't for the black swan here of March 2020, which was the global liquidity crisis of COVID's pandemic starting, you could see that the trajectory was already recovering here. And so you really had like a peak to trough of maybe 6 months, right? Maybe 5 months here from June to December, and it looked like another cycle was about to start right there, right? It looked like we were onward and starting to grow. Then we got this crash, and then we got what we know now to be this never-ending green candle from this area onward upward. And then we got another crash, but like you said, it took us from May or April 14th was the top, and then the bottom here was July 20th. So this was only 3 months. So, my theory is, since about the 2017 cycle, which was our last sort of simple cycle, it's been these bullish waves, right? Where each wave is about, we have the 2019 wave took about 6 months with a 5 to 6 month cool off. Then we had the 2020 wave, took about, 6 months with about a 4 month cool off. Then we got the 2021 wave, and that was about 3 months now with the 3 month cool off. And I'd have to me, it feels like the chart wants to go up faster and the cycles want to get shorter, where the actual bullish sort of frantic bullish moment is kind of short-lived. And then the bearish moment is short-lived, and you get sort of an overall channel of growth. And that's sort of my theory, right? It's not fully supported by the data, but what you're saying is also true, which is I believe that we're starting to divorce ourselves from the 4-year cycle. I still think we're going to get a blow off top of sorts here in the next sort of 6 months, maybe with Bitcoin. And I think there will be albeit probably shorter than before, a bear market. But on the whole, like you're saying, the actual halving isn't the driver of Bitcoin's behavior anymore. We have a much bigger market.
Yeah, for sure. Like, I think over time, Bitcoin will just, as its monetary premium grows and the portion of overall monetary premium that it holds in the world, I think it'll start to correlate more with things like real rates, right? Also, like, you have to think about the participants that we have in the market now. These are seasoned investors and institutional, like hedge funds. Now I'm starting talking about like pension funds coming in the market. These people are very patient buyers and very patient sellers. And so, like, when we kind of had that rounded top, they didn't just completely market dump. They just slowly trimmed, while we're in that 50, 60 range. And then when we were down in, to the 30 to 40s, what you saw is, like, if you watch the order books, and I watch order books a fair amount, I watch like the heat map of the order book, basically. What you see is, like, these are very patient buyers. They set their bids and they just wait, right? Like, they had their bids set down in the low 30s, and they weren't going to chase the price up. They just had them sat, and they just waited for the market to come back down. And every time it came back down, they picked some up, let it run back up to, whatever, like 35K, 38K. Everyone thought we were going back to all-time highs. And then, slowly we grinded back down to the bottom of the range. Then they picked some more up. And that's where you saw, like, that 30K floor was really strong, right? Because every time we came down there was that consistent bid. But that bid wasn't chasing the price up that whole range. It was very patient. You are obviously starting to see those bids slid up now. People aren't expecting that they're going to get 30K Bitcoin anymore. But while we were in that range, you saw very patient buyers. So like, yeah, I think like overall, I would expect the volatility to kind of dampen, which you do see over time. Bitcoin's volatility dampens. And yeah, like I think it'll somewhat become like the S&P in the sense that like the S&P just slowly grinds up to the right, and the volatility is very low. But at the same time, Bitcoin's also an emerging monetary network, so you have to consider that as well, right? Like you're basically watching a logarithmic adoption curve measured in dollars in real time. But yeah, like I think overall the volatility goes down over time. Start to correlate with more like macro factors as the type of investors that are in the market changes. And like, as we showed in that the blue chart that we were looking at, what you see is like over time, more and more coins were moving to the weekends, the speculators in the market until March of last year. And to me, what that's indicative of is like you now have institutions in the market, right? And they're picking up Bitcoin as a hedge. And they're saying, hey, look, this is insurance against the fiat system. I'm holding this as whatever, I don't know, 5% of my portfolio, but I'm just going to hold it, right? I'm not trying to get fancy with the market. Of course, you have hedge funds that are coming in, and you did see, like upticks in whales towards the end of last year, and then you saw a downtick in whales, as we started to move down into May. But overall, I think you have like this new general type of market participant. And yeah, like this is a side thing too. I would be interested to see if we start to get some of these arbitrage opportunities come back in, because I think a lot of people don't realize like a lot of the buyers that came in at the end of last year and towards the beginning of this year, they weren't necessarily like hardcore Bitcoin, maximalists or whatever. Like these are funds that just came in and said, hey, look, there's an opportunity here for me to basically break free money, right? Like I borrow Bitcoin off of, whatever, BlockFi or any of these lending platforms, lock it up in Grayscale, and 6 months it's at a premium, boom, right? Or, also this is another thing that a lot of people don't realize. For these funds that were piling money in Grayscale, they could automatically mark it up on their books. So at the end of last year, like if they were looking, like let's say their numbers were kind of and they really wanted to juice up their books, they could just pile a bunch of money into Grayscale, and then they could just mark up their books to make it look like their returns were way better than they were. But yeah, like also you have like, the futures arbitrage, right? Like the futures were trading at a crazy contango, which means like they were trading at a crazy high premium to the spot price. And that was driven by the demand for leverage. So you had futures trading at like a 30-40% annualized premium to the spot. So what you could do is you could just go in the futures market, sell a Bitcoin short, right? And then buy spot Bitcoin, hold that out until the futures contract expires, and then capture a free 30-40% annualized yield. And so that was drawing in a massive amount of demand for spot Bitcoin because they were just doing this completely delta neutral trade, which means they didn't have any directional risk in the price because they had already locked in that premium through the futures market. So yeah, like
well, and as the illiquid supply shock creates more price appreciation, those premiums also again enter the market, and so people actually learning to understand the high level arbitrage that's going on with Grayscale, the high level arbitrage going on with futures markets. This game has started to get taken over by the true predatory pros, right? This is not small ball. And that's why when you start seeing opportunities, like for example, over the last few weeks, everyone's getting greedy. Everyone on Bybit is over leveraged. It's not like this information is a secret. We know what open interest is. We know what funding rates are. We know how leveraged the market is. And all of a sudden, these whales that have the ability to move Bitcoin 1%, 2%, 3%. Well, the temptation to move it down 3% to create a cascading dump while they have a short in, well, that's easy money. As you said, that's almost non-directional risk. They're not even taking a risk. They're just saying, hey, we know we can dump this. We know we can see this. We can manipulate the charts. And so when you see a manipulation like that, especially as I've learned, and this is not data driven, this is just you live and learn in this stuff. When you see that stuff paired with news, like the Coinbase news, like the El Salvador news, like when you see these news clusters around big price action, that is meant to seem apocalyptic, that's when you know there's a game going on. At least it's just how it is. These big whales, they're too greedy. They see the opportunity and they're going to take it. And so, on days like a couple of days ago, you really, really want to sort of zoom out, look at on-chain metrics, look at what big holders are doing, and you can see, like one of the commenters so smartly said, this is a game of accumulation. This is a land grab at this point, and everybody knows with the Ukraine news, with the El Salvador news, it's brick by brick now. But it's the question now of who's going to be last, who's going to be left behind, and nobody wants to be left out of this game. Will, you've dropped so much information and knowledge. Please tell the audience what you're up to. I know you just launched your own podcast. You have your own YouTube channel. I was actually I didn't mean to be so forceful, but the other day you told me you were going to a college lecture. I said, what are you doing, man? You could be teaching a finance class. And I was so happy to see that you are taking yourself and your full-time crypto very seriously. Tell the audience what you're up to. And please, guys, follow Will, support him. He is the next generation.
Yeah, thanks for having me on, man. Appreciate the kind words as well. So I just got brought on at Blockwear, and I'm lead insights analyst. That's my fancy little title that they gave me. Basically just doing everything I already was, but now we've also launched something called Blockwear Intelligence. So we have a newsletter that we're doing every week. Also, I do like a video overview of the newsletter for people that kind of want to watch me like verbally go through the charts. And then also we do a weekly podcast with kind of different people in the space. This week we're doing an episode with a guy. He's pseudonymous, but he goes on Twitter by the name John Wick. He's a big options trader, been trading options for like 20 years. So that should be a good episode. But yeah, it should be getting more insightful guests and more knowledge for you guys out there. I think I'm just like you, man. Like I just kind of want to push education for everybody and kind of be that median to kind of leverage my platform to help people learn more. So yeah, if you're interested in any of that content stuff, check it out. I'm also on Twitter at W Clemente, which is CLEMENTEIII.
The links are in the description, guys. Follow Will. Once again, thank you so much, man. We hope to have you back very soon, and best of luck in all your new endeavors, sir.
Thanks for having me on, bro. Take care.
Take care. Well, as always, an absolute privilege to have Will on. The amount of knowledge that's flowing around that guy's brain at 19 years old is scary. But it shows to me that there is a real mainstreaming effect going on where the next generation here is understanding that this is where the opportunity is. This is where the future is. And this is where, if you're smart and you're adaptable, you can grow into being, I don't know how long Will's been doing this, but it's not very long. And he's already one of the strongest voices here in Bitcoin on-chain metrics here in the entire crypto space. I see some comments in the comment section saying it's humbling, he's my age, stuff like that. Well, you could be the next Will Clemente and go full-time crypto and build your future here. So I think it's a really powerful statement. Again, the on-chain metrics are clear. The big holders are buying while everyone else is panic selling. Follow the money and understand that this is a game of accumulation. And long term, I do believe that people who buy and hold the best assets in the space, of course, also the ones who are able to predict those best assets in the space, a little more of a risky game, of course, but those people will be having opportunities over the next few years that simply aren't going to rear their heads again, or maybe not for another several decades, or maybe even 100+ years. The change to blockchain, the change to cryptocurrency is probably one of the biggest things that's ever happened to our economy, our world, and you're here, you're a part of it. So thank you guys so much for joining us. As always, you can find daily content here on this channel. All you have to do is subscribe and make sure you have that bell notification on, because we're going to be bringing you lots of time-sensitive content, helping you see through the FUD, cut through the noise. And if that's of value to you, I highly suggest that you subscribe and put that bell notification on. Again, check out Will's socials that are linked in the description. Make sure you smash that like button if you enjoyed this video, and we'll be back very soon with some more content. I'm Elio Trades. You can find me on Twitter at Elio Trades, and I thank you so much for watching. See you very soon on the next episode.